Welcome everybody to Coffee with Casey. Today we're going to update on the August real estate market. Now the reason I'm doing this every week is because markets change and they change fast. We've seen some crazy stuff go on this year. We've seen contracts at 150, 200, 250 above list price. So we need to keep track of the market as we go through. The buyer's still out there, and as the market changes, how do we change? So today I'm going to look at the market in August, tell everybody where we are in all the different cities. And then we're going to talk about, so my house didn't sell in the first week. Now what? Now what do we do? What is the protocol for the older protocol that we had when a house doesn't sell in the first 7 days? So it's important you stick with protocols. These are tried and true policies that we have that you go through. I know everybody makes fun of me for calling everything a protocol, but that's what it is. If it doesn't sell in 7 days, immediately go to a protocol and boom, 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 boom. We need to be as efficient as we possibly can. And finally, I'm going to give you three things to avoid a home inspection. The first half of this year, we had 53 sales. We had one home inspection. We had one contract kick out because of that home inspection. We do not want home inspections. We want to prevent them as listing agents as much as we can. So we want to have a preemptive strike on how can we prevent that home inspection. So I'm going to give you three things we can do, and then we'll go from there. Because to be honest with you, as a listing agent, we want to make sure that everything is good with that house. Sometimes home inspectors get a little carried away and kill a contract. So let's take this over to today's show. All right. So we've got today's show is the August market update, and here's what we're looking at. Come on, fellas. All right. So the first thing we're going to look at is how are the sales going? And I look at contracts. I don't look at sales because, when they report, I got to get this out of here. How do I get that out, Billy? Just 1 second, folks. I want to make sure I minimize this screen so you can see what we're doing here. I need to take Billy and I and put us somewhere else. Put us down here. All right, that's good. All right, let's try one more time. Let's light it up. Oh, geez. All right, I'm just going to do it this way so you can look at it. All right, so these are the July contracts. Why do we look at contracts, not sales? Because the sales that are recorded today were on decisions and contracts that were made 45 to 60 days ago. We want to get out in front and find out how the market is doing today, not how it was 60 days ago. So contracts written is the number one place you want to get to. So we have, this is your July contracts from 2015, 2016, 17, 18, all the way through to today. So we'll see that July last year was a big July because we really, and you'll see in the next screen, we really had a bad beginning of the year. So we had a strong second half of the year, 1,583. This is on a 10-mile radius around Vienna. So it's a big, big group. And then this year, we kind of feel like July is, slumping off, but it's really not. So when you compare it to other Julys, we're having a strong July. It's fine. It's, as you can see, compared to 2018, 2019, we're 20% higher than we were. So we are not having a slump in July. Everything is going just fine. Let's go to the next one. Let's go to the next screen here. I swear I don't know what's going on with this computer, folks. But I can't see my cursor for some reason. Let me play with this. Just 1 sec. Everybody hang on. Talk amongst yourself. That was the wrong thing to do. All right. There we go. I'm back. Okay. So the green, remember, those are July sales. Well, let's see how it's compared to April sales or April contracts. So here's where the April contracts are. And you can see last year it really took a nosedive in April. Okay, it's rebounded this year. So in April of this year, we're at 1850, which is strong. You know, it's not bad, but it's not the killer that you would think it was. It's not like it was up 25, 35% over the contracts written in years gone by. It was compared to last year because of COVID. So when you compare that to today, I think we're looking at a very solid and stable market right now. It is still up. It's not like our sales are down or our contracts are down. So the first thing we want to look at, are buyers still buying houses? And the answer to that is unequivocally yes. They're out there. The buyer pool is out there and the buyer pool is active. Now, then the other thing that we're trying to read is what percentage of homes is under contract. So if there's 10 homes on the market, what percentage of those are under contract? And that tells you whether you're in a seller's market or a buyer's market. So let's take a whip around the Washington area and let's take a look at some of the towns. So Oak Hill, 77% of the homes in Oak Hill are under contract. So Oak Hill is still in a full bore, full throttle, you know, balls to the walls, seller's market. Virginia Run, same thing. Now those are smaller neighborhood kind of markets that are a little farther out. Gainesville's doing great. Centerville's doing great. Reston's doing great. So Percyville's at 62%. So what this tells me is if you look at the houses that are all in strong sellers markets, they're farther away from DC. Look at the ones that are closest to DC. Falls Church, Arlington, Alexandria, McLean. So these are commuter, this is basically where the commuters are. If they work and live right in Arlington or Alexandria or DC, this is where they're living at. Well, as you can see, their markets are not as strong as these outer lying markets. So you still have some appreciation working out here, whereas here may be a little tougher. You have to be a little more thoughtful. Now, when you're in a city and you're trying to list a house and you want to find out how your market is doing, remember, let's take a city like Vienna in here, 57%, but it's different for homes under $1 million, $1 million to 1.3, and over 1.3. So each market is different. So then we analyze what are those individual markets, all right? So we can see that, you know, in June, everything from 700 to $1 million was at 67%, strong sellers market. And that's fallen now to 56%. So not as strong as it was before. If we look at, you would think that the $1 million to $1.3 million then would follow suit, but it hasn't. The $1 million to $1.3 million is still strong. Now, whether that's lack of inventory or strong buyer pool, you know, then that's another analyzation. But now the biggest ones, you would think that they went from 47 to 45%, which says they're trending towards a buyer's market. Now look what happened today. And Billy, I know that you've seen some markets and you follow this as much as I do. In fact, you said, hey, we got a lot of houses in some market. What market were you looking at when you were talking about that, Bill?
I mean, I look at just Vienna, and I must be including new builds or coming soons because I have differing numbers. You must not have coming soons in, which is fine. But yeah,
I do not include coming soons.
Got it. Yeah, I mean,
this is what is active and what is under contract and what percentage is under contract. That's what these numbers are.
Got it. Yeah. The numbers, and the numbers that I look at, I mean, I'm a buyer right now. So I know when there's inventory coming because all of a sudden my searches start dinging.
Right.
And there's, I mean, me and Callie are looking for homes between 700 and 900 in Vienna.
Right.
So I just know as a buyer, I mean, I'm in the buyer pool looking.
Right.
Until July, there was nothing on the market past 6-10 days. Everything was under contract. Now there's starting to become more things that are sitting longer, and we're getting a lot of price decreases even. Right. So that's just, I mean, that was the big thing that I saw that I sent to you and said, hey, things in my search are starting to change. So that's why I had sent that note to you just saying, hey, we need to be cognizant.
We can look at this and say this could be attributed to more inventory coming on the market. But, you know, when we look back, the sales are still consistent. So,
right.
As in this one. So if something's going on, it's because if something's going on, it's because the inventory is growing.
Yeah, definitely. I mean,
The
we get
inventory is growing here, maybe not so much here.
right. We used to get, we used to get maybe 2 to 3 houses a week. Now we're getting 10 houses a week. So I know that the inventory is definitely ticking up. And again, that might be a micro look at it. I don't really look at Centerville as much as I do Vienna. I mean, I have,
Right.
in the back of my head, I know what's going on out there, but I'm really focused on Vienna because number one, most of my listings with you are in Vienna, and I'm also a buyer in that market. So
Right.
my hands are deep in that market. And that's why I just had said, hey, we need to monitor this. Things might be changing. I know in 2015, you always tell the story about how, that we thought it was a great seller's market. And then all of a sudden it flipped to, there was 40 houses on the market and
Right.
only one was under contract, and everyone, wasn't aware of that.
Well, that's why we're here, Billy. We're
Right.
here to make sure that we don't get hit upside the head with a brick like we did back in 2015.
Yeah.
So yes, we're in a strong seller's market. Yes, things have changed dramatically over the last year and a half. When are they going to change back? How are they changing? Every month is different. So every week is actually different. So yeah. So, we'll look at that. Maybe we come up with a barometer of what's the coming soons, that are coming out there. And I get it that that's future inventory. And maybe I'll see that next week when they've launched and now these numbers may change a little bit. But
Right.
if you were a buyer, you need to know these numbers. And if you're a seller, I do this for every listing we have. What is the percentage of homes under contract? And as Billy said, he's in this market right here. Is this market right here and this market right here, are they the same? Well, in June, they were not, right?
Right.
Now they are. Okay. So we really need to understand the markets, when we're going to list a house, when we're going to sell it. And that's going to bring me to the second thing. Let me get rid of the shared screen here. Let's talk, Billy. Because the market softens when it does, and the expectations are high that it's going to sell like that, sell in the first week, sell for 100,000 over list price, which some do. I will tell you that this week, we're going to launch Oak Street. Oak will go off at $1 million. It'll sell for 1.15 million. And the question is, why don't you put it on for 1.15 million? And the answer is the buyer pool won't really accept it. You need to get them to bid it up to 1.15. It will appraise for $1 million. We just sold and are settling on Chainbridge Road, which we were under contract at 1.49 and appraised for $1.3 million. So, there are still those things going on. However, if you have road problems, road noise, if you're next to the Dulles Toll Road, Route 66, the widening of Route 66, busy roads, or the home is not exactly what everybody's looking for, an arts and crafts house or whatever, if it's a unique house, and they could sit on the market, right? Or a seller says, I don't want to go off at $1 million. I want to go off at 1.15 million and learn a lesson, a tough lesson. And that house sits beyond 7 days. So now what do? Do we panic yet? The answer is no. So let me go through the process. The first week is the most important. That's when you're going to get big bids, 100, 150, 250, whatever, something over that. Pretty much 99% of the homes that are going to sell in that time period will not have a home inspection with it, right? But more and more homes are going into that 20, 30-day period, and more home inspections are coming. So I need to tell you the 3 things you need to do to prevent the home inspection. But let's stay on task. The first week is gone. Okay, now nobody took it. Now what do? So this means that the buyer pool that has been looking at your house, we immediately are talking with every agent. We're talking about why didn't they find it? What's wrong with the house? There's a lot more communication that has to go on between the agents, the listing agent, the showing agent, and the seller. So we need to know what's going on here, because we're going to have to make some decisions down the road on pricing. So we talk to every agent, we find out who they are, we find out where they're coming from. This is why when I'm sitting with a seller, I know your buyers are coming from Arlington, Alexandria, or yours are coming from DC, Alexandria, because we know who's looking at your house or similar houses to you. So So really, we really get working on why didn't they buy it? What's going on? Well, they didn't want to get in a bidding war is the majority of the time that we hear that. They just don't want to bid. They like the house. They think the price is right, but they don't want to bid. That's fine. So they'll wait that period. Let's say your limit is 1.15 million. You'll wait that period. Is it still on the market? Yes. We call those the monbacks. I'm going to come on back. I'm going to take a look at it one more time, maybe two more times. All right. Now, your opportunity comes in week 2 and 3 that you're going to get that possible full price contract, where that's where you're going to end up, because those are the monbacks. They do like the house. They like everything about it. They're willing to come back. They're interested. It's kind of like fishing. You see that bobber going up and down? Somebody's nibbling on that thing. So you're waiting for them to take the bait and sink the hook. So, we're watching them and we're talking to them and we're expecting to get that full price contract. All right, now let's say we've cleared the monback period. We've cleared through week 3. We've talked to all the agents. We're looking at how many people are coming through. If you've had 40 people walk through that house, then all the marketing has done its job, because the marketing is there to get people in that front door. Now, if they have not taken that house, they are not going to go through or write a contract, then you got to take action. So here's the action that we take. After week 3, I can't wait until we start doing cocktails with Casey instead of coffee with Casey. I think it would be a lot more entertaining. At least the second half of the conversation would be a lot more entertaining.
Yeah.
So then we go to nobody's come in the monback period, week 2, week 3. Now we're at the end of week 3. Now what are we going to do? If we've made the decision that we did overprice it, that the market is not accepting that 800, now we need to move to 750, or we got from 1.5 to 1.4, wherever we're going, we need to make that movement. Before we do, we go temp off. We go temp off right before the Thursday of week 4. Okay. And the reason we do that is because sometimes people, those bobbers are still going up and down. And when you go temp off, then that bobber will go underwater. With some of the buyers, they're gonna be like, wait a minute, I was watching that house. Where did it go? They'll surface, right? And we'll say, okay, all right, well, we're getting ready to drop this price. And when we do, we're gonna get multiple contracts. So if you want to buy this house, you better move fast, move now, get it in before I bring in multiple contracts that you're gonna have to bid against. Now, a lot of buyers have already lost 2 or 3 houses. They don't like that word bidding. That's why they're the monbacks, right? So a lot of times they'll say, well, wait a minute, before you put it back on at that price, I'll give you a number. Maybe we try and negotiate in those 2 or 3 days to get that full price contract. If we do not, then we drop it to $50,000 or whatever's appropriate. If you're up in the 1.6s, usually we'll go to 1.5. If you're in the 800s, we'll go to 750. So whether we drop 100,000 or 50,000, depending on the size of the home, why wouldn't you drop $10,000 or $15,000? So Billy, you know that the buyer pools are at certain levels, and we've already exhausted this buyer pool. If I'm at 850 and I go to 875, 785, same buyer pool. Nobody new is in that buyer pool. So right. They've already walked away. We need to get to a bigger buyer pool. Now, Billy, you were involved with one where we went from 1.6 to 1.55. Mm-hmm. And didn't we get 2 contracts at 1.6?
Yes.
We had 2, right? So, the one thing that sellers need to be thoughtful about is just because you go and drop the price doesn't mean that's your price. I mean, what we did was go from 1.6 to 1.55 because we couldn't get the buyer pool to accept that house. We went to 1.55, 2 people snatched on, and we got right back to 1.6. So that's the protocol. And, you really need to stick with it. And I know that, sellers' expectations are high. Their friend's got 150,000 over list price, but listen, that friend whose house sold at 150 over list price is one of your comps. That's why you are priced where you are right now. So if he went here and he priced and he got this, well, this is where your list price is. So I think we need to be thoughtful about knowing your comps. Did somebody just get crazy with that comp? Let me give you an example. We had a house on Flint Hill, and that house was worth $1.4 million. It might get bid up to 1.45, maybe 1.5. We got 165. Is that house worth 165? No. But if somebody prices a new listing off that house, they're going to be way overpriced. So you need to look at what happened. And that is called an anomaly. Okay. When I do pricing and you have 8 comparables, first you have to pull out the anomalies. Everybody's selling at about 112% of assessment. Okay. This one's at 103. That's an anomaly. It's got to go. One's at 140% of assessment. That's got to go. You look at price per square foot. They're all somewhere in the 280s, 290s. One is at 345. That's an anomaly. So you've got to throw out the anomalies, and Flint Hill would be an anomaly. Now, the problem with pricing engines online like Zillow and all the rest of that, they don't take that into account. That is a comparable. So if the anomalies are still in there, they could swing you high or swing you low. Perfect example. I look at all pricing engines, and Billy, we've sat down in listing appointments. You've seen them. The estimate from Zillow and RPR is $150,000, $250,000 different, right?
It's 10% always. I mean,
It's
historically.
10%. Yeah, or more. I mean, it's crazy. So Flint Hill is an anomaly. The house you did, and you got buyers to go from 1.3, which is what it's worth, and they bid it, and before you know it, it's 1.477, right? But you had 2 executives from where? You had
IT executives, yeah, Google and AWS.
So you had an AWS guy going against Google, and they were not going to be outbid, and they just ran it up. That's an anomaly, right?
Right.
And we saw that a neighbor, came to us, and we said that is correct. He did get that, but that is an anomaly. So let's just look at this. And we told him to price it at X. Another agent came and said, oh, no, you got to price it at Y. Within 2 weeks, it was back down to X. So, you really need to be thoughtful about your pricing in a market like this. So we look at the market. Are we at 60% under contract, 70% under contract, 80% under contract, or 40% under contract? We price it correctly and get this thing rolling. So we don't want to get into the 30-day protocol, but if we do, it's there and it has a purpose. So let's talk about another thing. If we go to 30 days, and this is what I say, you guys have had a year off because you haven't had any home inspections, right?
Right.
I mean, we have a protocol for home inspections. They are 90% of the problem with every house. This is one of the main reasons why you really shouldn't be paying a lot of money on your commissions, because when we sell a house in the first weekend and we have no home inspection or no appraisal, it's a lot easier. So, to pay exorbitant amounts for commissions is crazy. All right. So let's look at the house though, that has gone for 2 or 3 or 4 weeks, which we're now seeing, and we didn't see before. I mean, we saw 1 of them in the first half. We've seen 5 of them this half. So now we have to come up against home inspections. What are the 3 things we can do to keep from getting a home inspection? 1, Oak Street. We're going to price it at $1 million. It's going to go $1.15 million. That's not going to have a home inspection. We don't want any home inspections, not because there's anything wrong with the house, because contracts kick out. So the bidding is going to create no home inspection. Okay. So that's one way to do it. The other way to do it, to prevent it, is get every repair bill, every brochure, every manual for your house, get them all together, get a notebook and a three-hole punch, and create a notebook that has, here's all the electrical stuff. If you have an HVAC warranty, or somebody comes out and inspects it, you should have all of those in a notebook. So when a buyer sees a notebook, he knows the seller's taking very good care of the house. Oh, here's this, here's that. You built a pool, you built a screen room, you built a deck or a lot, whatever you built, you should have the bill for completion, and you should have a certificate saying it was permitted. So all of these things give buyers confidence to say, I don't need a home inspection. So if the more you can put in that book, and it's really simple, get the book, get a 3-ring binder, okay, a hole punch, and just have electrical, have different, sections, electrical, heating and cooling, plumbing, repairs, additions, any upgrades you've done. If you just bought a new refrigerator, put the manual in there, right? That's in appliances. So you got your appliances, electric, heating, cooling, blah, blah, blah. So the bigger we can build this book, the more stuff that's in that book. You have it. It's in some file in your office somewhere. Just bring it out, 3-hole punch it, and away we go. So that's the second way to prevent a home inspection. The third way of preventing a home inspection, if I'm looking at a house and I'm going to say, you are not going to list it for $1 million, you're going to list it for 1.15. That's going to limit the people through. It may have to go through the Monback 30-day period. So I'm going to recommend that we do a pre-listing home inspection. Now, a pre-listing home inspection is not a full home inspection. I don't want a full home inspection. I just want you checking a few things. I want you checking the dates of all of our systems. In other words, when you go to your water heater, that serial tells a home inspector, how old is that? You may not know, but he does. So we need to have the ages exactly of what everything is. We need to make sure they've all been tested and are working fine. We need to make sure that the gas lines and the water lines are all checked so there's no leaking going on of gas or water. They don't want their house to blow up. So I'm trying to increase their comfort level with this house. Is there any moisture in the house? Is there moisture in the basement? Is there moisture in the attic? Is there any mold in the house? So mold is a deal killer, right? So basically we're looking at 4 things that we do when we come in that house. The electrical system good? What's the roof look like? What's the age of all the appliances? What are the gas lines? So for $350, okay, this is called, preventative maintenance here. If we spend $350, we could save ourselves $10,000 on a reckless home inspection or a home inspection that causes a contract to kick out. I can tell you this, when that home inspection kicked out that one contract that we had, the seller lost $70,000, right? No home inspection. I mean, a high number that kicked out. We had to go to contract number 2, which did have an appraisal contingency, and it went down to 1.43, right? So we lost 70,000. We went from 1.5 to 1.43 because of the home inspection. So if we do, number 1, price it right. Number 2, where there's no home inspections. Number 2, have the book out there and ready to go. In other words, don't hide it, get out in front of everything. Or number 3, we have literally had a home inspector come in and check on the main issues, the main problems that buyers are looking for, and say, no mold, no moisture, gas lines, water lines, everything's complete, blah, blah, blah. How old are all the systems in this house? Is there a verbal look through? Is there any major cracks in the foundation that need to be, that don't meet, standards of a structural engineer? They can also look at things and go, look, your grading is terrible. Your grading is going to cause it's just a red flag for any home inspector, home buyer. If your grading is going towards the house down, that's a problem, right? If they see signs of disrepair, that's a problem. So when a home inspector who's a friendly home inspector walks through and gives you a visual, he can say, this is a red flag. That's a red flag. This needs to be fixed. That needs to be fixed, right? So by doing that, we get out in front of that. We don't want to lose $70,000. And I'm going to tell you one thing. They're lucky they only lost $70,000 because if you go from 1.3, I think it was our list price, to 1.5, and you have to go back on the market, everybody's going to know you failed your home inspection. And guess where the numbers are going to come in? 1.3. Could have lost 200,000. Now, the reason why they didn't was because we were at the right price. We had multiple contracts. We went from contract 1 to contract 2. Contract 2 had an appraisal contingency, but they accepted our home inspection and the fixes that we made to that. So when the appraisal came in, we lost our $70,000. Now, so we don't want to go back on the market. 70,000 was the minimum we were going to lose. We could have lost a lot more. All right. So just one more preventative thing for just as a tip. When we knew somebody was going to come in and appraise the house, we had our own appraiser come in. We brought in Mike Mignotti from Anthony Appraisers. We said, Mike, what's the most you can appraise this house for? In the most favorable condition, he appraised it for 1.35. The buyer's appraiser came in at 1.3. Okay. So we don't really care. We have a 1.35 from Mike Mignotti, who owns Anthony Appraisers. So what that did was, instead of going from meet in the middle of 1.5 to 1.3, coming all the way down, that moved the needle to the middle being between 1.35 and 1.5. So again, we use professionals to support our position so we can negotiate. Guys, there's tens of thousands of dollars at stake here. When you're selling your house, like I just told these sellers, you can clean it up if you want, but you're going to make 100,000 more if it's clean and sparkling and everybody comes through and thinks it's a dollhouse. And if it's not, you're going to lose $150,000. So there's a lot of money at stake. There's a protocol for preparing the house. There's a protocol for pricing the house. There's a protocol for marketing the house. There's a protocol for doing coming soon. There's a protocol for doing predictive analysis. There's a protocol if it doesn't sell in the first week. There's a protocol for everything. You got to be prepared for the what ifs. When we move from anybody can list a house and get big contracts to now you have to go back to being a real professional realtor, you need to make sure you're working with professionals. Okay, Billy, you got anything else happening this week, or are we good?
No. It's good. It's good. Yep.
All right, buddy. All right. My name is Casey Samson. I'm at Casey at CaseySamson.com. You can reach me at 703-508-2535. Yes, I do pick up my phone. Or you can check out all of our stuff at CaseySamson.com. You can see all of our podcasts, this included, in order of what we're doing. And that will go over all the process that we've been doing. So the market still looks healthy. We're still a go. Sellers market in there in most areas. The farther away you get, the better the seller's market. The closer you get into city, the worse the market. Okay? All right, guys. We'll see you again next Thursday at 11 o'clock on Coffee with Casey. Bye now.